This TFMR podcast is brought to you by your friends at JM Bullion. Visit jmbullion.com for all your gold and silver bullion needs. Welcome back to the TF Metals Report podcast highlights for the week of August 9th, 2021. We were off last week on summer sabbatical vacation, so it's good to return this week. We were greeted with a deliberate, overt smash from the banks of both COMEX precious metals. This occurred at 6:45 Eastern last Sunday night, the 8th, the lowest volume, lowest liquidity time of the week. Barely any U.S. traders paying attention. 45 minutes past the Globex opening. Asia still not open. Europe sound asleep, but yet prices were smashed into this illiquidity. As the week progressed, we found out this was actually a good thing, and we'll get to that in a minute. But on Monday, we were still dealing with the ramifications of this. We noticed the importance of support between 1680 and 1700. We hoped it would hold through the week, and that was a big topic of discussion on Monday, August 9th. First, this is a COMEX digital gold December contract going back to the first of the year. Look at all the big red candles, just all kinds of big red candles. You don't even get the one from June because it printed off wrong. But that's a big red candle from Fed Day in June when we took out the 50-day and the 200-day. That was ugly, too. Anyway, my point in showing you all this is there's two things. One, the RSI now is down to 20-6. Okay? That is damn near the low it has been all year. Washing out to 25 in early March when we got down to 1680. Washing out to 27 right after the Fed meeting in June, and now coming all the way back down to 26. So at some point, it's not going to go to zero. It's not going to, but it can continue to go down while the RSI is down here. You know that. But we're likely due for a bounce. Again, maybe we'll get something with the CPI on Wednesday. But I can't imagine, you look at this chart, getting smashed back in early June when we were trying to break out through 1920. Smashed into the Fed and through the Fed in the middle of June. Finding a bottom at 1760, rallying to 1840, but then two attempts, really three, to get back above the 50-day and the 200-day and then failing as recently as last Wednesday. Well, that looks a lot like what happened in January, doesn't it? Big smash early in January. Spends a couple of weeks trying to get back above those key MAs and then failing and then rolling all the way down from 1860 to 1680. Okay, well, look, doesn't that look what just happened here? That's why when I say this chart looks terrible, it looks terrible. The one thing we've got going for us is back here in January and February when that happened, and even in early February, the RSI was up at 50, so it had room to wash out, which it did, down to 25, but we're already at 26. So that may help us out, because I really would be surprised if we didn't come back down and test this 1680 again, just like we did in March. Okay? So at some point here in the next couple of weeks before Powell, we're going to try that level again, and then we'll see if we can't bounce and take another stab, at least up toward the 50-day, which you can see is bearishly crossed now and falling sharply just like it was in February. So all of this put together does not bode well. On Tuesday the 10th, we thought we should take a look at COMEX Digital Silver because it too had been smashed back on Sunday evening, August the 8th, taking out a number of support levels, most importantly $24. 22 is a major support level. We definitely want to stay above there, but we took a very short-term look at the charts on Tuesday, so we knew what to watch for the rest of the week. Why was silver smashed when gold was smashed? Because, again, it's the same banks are short both. So as silver was trying to get its footing on Sunday, late Friday and into Sunday, okay, between 25 and 25.20, smash. So this now is going to be your trend line that you're going to want to watch going back to chlamydia. That's around 23.60. Okay, obviously we want to watch. You can see the little levels here around 23.20 for support. From below there, we're probably talking well into the 22s. But if we can get rolling, get through 23.60, then 24 and 24.40, you can see that for yourself will be important. But again, I just don't expect. I mean, maybe I'll be dead wrong. God, I've been dead wrong a lot lately. Maybe I'll be dead wrong and we'll bounce and the CPI will be crazy and, who knows what will happen tomorrow. But I suspect, like I said, we're working toward a sell the rumor, buy the news thing, or buy the rumor, sell the news if we're talking about the dollar, working toward Powell and his Jackson Hole speech, which will start to get leaked and trial ballooned next week. All of that, maybe we'll finally, once we get to the end of this month, start to stabilize and begin to make some plans for the back third of the year. The price of COMEX gold continued to try to recover on Wednesday the 11th. One of the things we talked about was another visit to the TIP market and what it indicates. TIPS, of course, Treasury Inflation Protected Securities, an indication of inflation expectations. And that, of course, is an indication of real interest rates. As you know, sharply negative real interest rates, or real interest rates in general, have a long-term 95% correlation with gold prices. So as you look at these charts of the TIP with COMEX gold, you can see how closely they're correlated until about a year ago, when all of a sudden gold's been smashed over the last year for $300, while inflation expectations and TIP prices have continued higher. This disparity will end. So will the TIP come down with crashing inflation expectations, or will gold eventually rush to catch up? I think gold will rush to catch up. That's all part of what we discussed on Wednesday the 11th. Okay, 2 charts of the TIP, because I thought, well, again, this is worth noting. Do you believe it's transitory or not? Do you believe real rates are going to stay sharply negative or not? The TIP is saying it's not transitory, and the real rates are going to stay sharply negative. And gold, of course, try to promote the opposite narrative, has been getting smashed. Now, you can see the relationship between the TIP and or inflation expectations and or real interest rates versus gold in these 2 charts. Now, you might think, well, you're just cherry picking because the first one is a weekly chart but only goes back 3 years. Okay, fine. The second chart is a weekly chart that goes back 11 or 10 years. You can see the correlation for yourself. And you can see that on a relative valuation standpoint, the TIP is implying somewhere around $2,000 gold. Okay, well, what are we now? 1756? What do I keep saying? How does gold catch up? How does a transitory narrative wear off? Suddenly, and then all at once. And I'll remind you, this is not like this has never happened before. Just last year, when I was coming back from vacation in early June, we had the BLSBS report, June the 5th, I believe was the date. And gold fell to 1671 that day. And it looked like it was going to break down out of that 1680 to 1780 range. And things looked terrible. It reversed. And then from June the 5th to August the 6th, it went from 1671 to 2081. What's that? 25% in 2 months? That would be your very definition of suddenly recognizing something and then moving all at once. So I'll just remind you that a lot of these things aren't out of the question, even still this year. Our free Thursday conversation this week was with my old friend Chris Martinson of peakprosperity.com. Chris, of course, the smartest guy I know. He has a PhD in pathology, specializing in neurotoxicology. Okay, so he knows what he's talking about. He's been an expert voice on COVID since before the pandemic even began, warning us all at TF Metals Report back in January of 2020. I went to him for an update this week. You should definitely be certain to listen to it and then forward the link to anyone you know, as it's a free link at TF Metals Report. It's right on the homepage. Be sure to listen. And now on Friday, August the 13th, we're seeing a recovery, continued recovery in gold and silver from the absolute smash, deliberate smash delivered by the banks back on Sunday evening. We now have a wonderful, beautiful reversal green candle on the gold daily chart. As you can see in this final chart of this week's post, look at that double bottom, washout double bottom, down to the 1680 level. Clear level now to watch. Anything below 1700 is extremely solid support. But on the way back up, we're above the bull flag line, the breakout line from the August last year highs, and now any move above 1940 should send us to 1920, and anything above 1920 is going to get the whole world excited about owning gold in all its forms again. So watch closely in the weeks to come with Powell's Jackson Hole speech pending for 2 weeks from today. And then the September FOMC, the Fed is truly trapped. It's always been just a matter of time before gold and silver exploded higher again. And after the action this week, it appears we are on the verge of just that. Have a great weekend, everyone, and thanks for listening to the TF Metals Report Weekly Podcast Highlights.